Good morning, everybody. Thank you, Aurora, and thank you, Ariane. We love coming to Capital on Stage. We were here last year for the first time. We love the format that turned the tables a little bit on the VCs and puts us in a very uncomfortable position. I'm much more sympathetic to all the founders after having to pitch to you. So who we are, Bootstrap Europe, venture debt. It's quite an unusual product in funding of European startups. And yesterday, a very well-known Amsterdam founder told me that the only venture lender he's ever seen was a tall, gray-haired man, all dressed in man, basically like an undertaker. So I thought it was a good opportunity to dispel a few myths about venture debt. So we are a venture investment firm. We are active all over Europe. And what we do is we provide loans to growth companies active in technology or life sciences. And it is a product that is not super well known or super well used in Europe, as opposed to the US. And in the US, the very famous technology companies, your Google, Facebook, basically the most successful ones have had to use venture debt because at some point, the equity becomes so precious to the founders and the investors, they don't want to give up and they don't want to be diluted. In the US, it's so well used that for about every $10 of venture capital invested, there is $1 of venture debt. So it's a good ratio of 1 to 10. In Europe, we think that it's about 1 to 100. So there's a way enough space to develop this. And what is venture debt? I'll give you a very concrete example of a company we helped recently. It's active in travel technology, and travel is probably the largest e-commerce vertical. They are giving airfare search and optimization to companies like Lufthansa, Emirates, or search engines like Kayak. And essentially, they were in their discussions with Lufthansa. They needed about 12 months of funding. They needed a strong balance sheet to go into licensing discussions with big players. And they thought, okay, they were worth about 10 million of valuation. We want to raise 1 million, so we have to give away 10% of our company. We know that we're super valuable once we get this contract. So let's try and push it further. Let's get that now. We'll get the equity after we develop the technology, expand a little bit, and get the Lufthansa contract. And after they got the Lufthansa contract, they were worth suddenly 50 million. So when they raised 10% of the company, they got 5 times more. They got 5 million instead of 1, reimbursed the loan, and went on to raise successfully equity funding. So these are the type of things we do. If you are at a stage where you already have a product market fit, you already have customers, you already have this momentum in the growth and in the funding, we can help you and your investors leverage that up. We need you to be a fast-growing company. We need you to have ambition. We need you to want to accelerate your growth, and we are happy to help you do that. Because we've been entrepreneurs. We're a team of 3 people. We've built companies. We've failed at building them, and we started again. And we realized that the best way to contribute to the ecosystem was to bring in another tool that were not widely available and that could support both the entrepreneurs and the investors. We don't need you to be cash flow profitable. So to dispel another myth, we're not a bank. We're not going to ask you personal guarantees or anything. But it is a loan that is, like your real estate loan. You're going to reimburse it over the period, typically 3 years. We give you 3 years. You can reimburse it early if you want. Essentially, between equity rounds, if you are bridging to certain milestones, if you've just raised equity that gives you 18 months runway, maybe, and you want to extend it to 24 months, this is a good way to do it. If you want to accelerate that rocket ship, we are the rocket fuel. We're completely tied to your rocket ship, so we don't want to blow it up, but we can help you go further. So come see us after the discussions, after the presentations. We are based in Zurich, Paris, London. Europe is a big continent, lots of languages and legal systems, but we are happy to navigate that because we've been all over. I'm from Senegal, educated in France, worked in London, and started like an insurance company in Africa against natural disasters. And at some point I thought, I want to build my own company. I want to be involved again in innovation and entrepreneurship, and that's what we're trying to do all together and hopefully working with you. Thank you.